Hello everyone, this is Dan Gramza and welcome to Advanced Gramza Market Studies for Monday, September 20th. Well, very interesting day on Friday. Consumer goods prices increased, consumer sentiment was at a 10-year low. That's not new, it's been down here for a while. We also had the quadruple witching hour, or a number of options expire on Friday. But is this sustainable? Next week we got the FOMC meeting. Do people want to go home short here permanently? Is that the action that we're seeing? I don't think so. And not that I'm an eternal bull. It's just that we are at levels that we could expect to see a bounce. In the S&P, you don't want to see 4430 again. If you do, then that's an equal. I'm talking about on Monday, sorry. That would be an equal and opposite. It's rejection, and that would imply Tuesday would be an up day. So how we trade on Monday, I think, could give us some important clues to the rest of the week. What has changed? Not much other than that the bullish level is now 44.25, just in case it decides to give us that bounce. Over here in the NASDAQ, 15,500. Down here in the Dow, 34,700 is now the bullish level. And in the Russell, the bullish level there, 2240. So those really haven't changed much. I just think we need to be cautious on the short side. All right, let's move on. And in the currencies, boy, dollar stays stronger against all these currencies. I just find that interesting and unexpected, really. This action that we're seeing for Friday is typically not what you expect. We're looking for unchanged to lower, smaller range day, so that's right on target. But it's where we're located, and we're at levels, again, that buyers should be coming back into these markets. So, in the euro, the bullish level there is now tightened up. It's at 1780. In the Swissy, it's at 0780. In our friend Mr. Yen, it's at 9130 is the bullish level. Down here in the Aussie dollar, that bullish level's been moved down, 73.10. The British pound, the bullish level there is at 137.80. And over in the Canadian dollar, the bullish level in that market is at 79.10. That remains the same. So look for inside type days. That's what I'm looking for. Or a market that breaks lower and then gives us a bounce. In Asia, you would look for weakness on Sunday night, 5 o'clock Chicago time. The critical piece here in these currencies is actually Europe. Europe, I believe, will set the tone for Monday's session. Bitcoin backed off a bit. Buyers are still here, though, but they can't get the job done. This is acting like gold and the U.S. dollar, actually. But right now, we are looking for follow-through to the upside. It still has an upward bias. In the interest rates, yields increased as prices went down. 23.12 is now the bullish level in the 5 years, 33 even in the 10 years, and over in the 30-year bonds, it's at 163.08. Now these markets, I'm looking for inside type days. We're at levels where going sideways does make sense. So I don't really look for follow through to the downside in any big way on Monday for interest rates. Let's move over to the metals. I just find these interesting. And the bullish level here for gold, 1770, that's been tightened up. Be very cautious on this. This does have the potential for turning the corner. It's what I call a false sense of security. And it also implies that sellers are still coming in. And that's what we see here in silver. The bullish level, though, has been moved lower. It's 22.90 in that market. And we're looking for it to stay below 22.70, ideally, if you're on the short side for that market. And look at copper. It was positive for a while. I thought, son of a gun, that makes sense. And then it fell apart. I just don't get, because this market has so many bullish fundamentals surrounding it. But price dictates what we do, and if it wants to go lower, you and I want to be on the short side for that market. Nothing's changed here in terms of parameter. The bullish level here is at 38, bearish level in that market is at 34. Well, energy. What we see here is that crude oil traded just a few cents below its bearish level, and the doggone it, it popped right back up. That means if we were a seller here, that is underwater. And the dollar value of that change in that market is $1,500 a contract. 73 even is the next bullish level in that market. It does have a bullish bias. They are buying the break, so higher prices would be expected. I still don't look for a dramatic move to the upside. There are some challenges for that market. And in that gas, how about that? The way it broke lower. Now, on Monday, you don't want to see 520 to 525. You don't want to trade back in that area if you're on the short side. Now, the bullish level in that gas is at 523. So let's, what did I say, 523? Oh, the bearish level is 528. Yes, the bullish level, 523. I want to make sure I had the right numbers. Alrighty. Grains. Beans. Well, we found sellers. They are getting follow through, but don't look for a big day down. 1270 to 1275 would be the next expected range in that market. Magnitude change right here in beans. Again, just to give you a feel, $300 a contract. $12.95 is the next bullish level. And in corn, even though we did break lower and the magnitude change is $300 here, the next bullish level is at 533. I'd look for an up move on Monday. These are not really super bearish setups. And if sellers are here, then you need to see down days on Monday. But I'm very suspect of that. Wheat. Soft. Super bearish, not so much yet, but if we get near 7, then we could start expecting the possibility of retesting those lows. So for Monday, for wheat, that'll be an important day for you and I to get a feel for longer term action. Well, that concludes today's Advanced Market Studies. Thank you for being with me. I'm looking forward to being with you again, and as always, take care.